AI journey, we do get more and more clarity. And today we have Jefferies explaining what they feel about the whole Indian IT pack. Now, what they name the report is they name it as pain not over yet, but they're still selective. There's still hope among the large caps and the mid caps. Now, what they say is the overall IT mix will change eventually going forward. It will move towards consulting while shrinking the managed services given on the back of that new AI tool that is taking over the managed services. While they also make a note stating that they would require the overall trend to move cyclical and they would opt for selective approach than betting on the overall IT pack. Now, in terms of the estimates, they lowered the EPS estimate to 1 to 4% and they cut the target price for almost all the IT companies in the coverage by 33%. While they also make a note that the Q3 results saw a good up move in the stocks. Some stocks even rallied 8 to 10% post the result. But again, the AI fear is something that led the overall sector in red, and the de-rating has started since then. Well, further, they also make a note that they like Coforge, Agility and IKS remain their pick, and they expect the growth for these three companies to be far more compared to the other pack. Well, they have also made key changes where they have downgraded a couple of stocks. Now, what they do is they have changed the stance of Infosys to hold, HCL Tech to hold, while Emphasis to hold, and they have also cut the target price from 1880 for Infosys. They have cut it to 1290, while HCL Tech also has a cut from 1885 to 1390. If you look at Emphasis, again it turns to hold from initial buy, from rate changing from 3,410 to now 2,450, 1,000 rupee cut coming in for Emphasis as well. Now, in terms of the other further change, we say LTI Mindtree, they have changed the stance to underperform, while they have again cut the target price for LTI, Mindtree, TCS and Exavid as well on the same back of the overall AI fear. While they have also given the scenarios where they say if it's the case one where the growth is maintained the way it was in last 10 years, then that's a best case. And the growth in line with the previous decade would be the best case of outcome what they see. While that would lead to the P maintained between 40 to 22x, where the current P is between 20 to 22 of all the IT players. While the second case is the worst case, where they see the overall outcome to see a 3% downtick in the top line, which might impact the overall IT pack by 15% going ahead, which is the worst case, and it would lead to further derating of the stocks from current levels to further 40 to 60% of it. While the third case shows no growth till FY31. So all in all, we see the brokerages penciling in to be selective over few stocks, but the fear